watched the show yesterday. We had one of our asset managers on the show. We have another with another report, this time from CardinalStone. I love printing these out. They are so incredibly informative. There it is, charting the sustainability path for Nigeria as far as their mid-year outlook is concerned. We're very happy to have the head of Macroeconomic Research at CardinalStone Partners, Boboye Olaolu. Good morning, sir. You're welcome.
Good morning, Lotus. Thank you for having me.
I'm great to have you. Lots to get into, so many charts. I want to start with the Purchasing Managers Index. Yeah. And some of these charts are pretty positive. This trajectory we're about to see here, this upward right, if you will, what does it tell us about, I guess, the business environment in Nigeria?
Yes. So the Purchasing Managers Index is basically a survey across different industries to get the perspective of producers, manufacturers on how things are doing. But for us, we like the Purchasing Managers Index because it's instructive in terms of forward guidance, especially there's a lead indicator part of it, and there is a lagging indicator part of it. So they give employment numbers, for example, which is a lagging indicator, but they also give new order, which is a leading indicator. Yeah. And when we begin to see lead indicator giving us positive trajectory, it gives us an indication that the economy might be robust or might be moving into a robust territory. And that's what we saw basically. So we saw the Purchasing Managers Index was well above the 50 territory benchmark, which means it was positive, right? Even though we don't have the GDP numbers so far, we believe that growth in the first half of the year was pretty much solid. Yeah.
Hey, look, our guest yesterday, you today, everybody is waiting for these Q1 GDP numbers. Dear Bureau of Statistics, what is taking so long? Another chart you had, again, since the title of this is charting the sustainability path, right? So we want to see sustained PMI going up. We also want to see business profitability. You have another chart showing that, at least for publicly traded companies, talk to us about that chart and what it's saying about profitability of businesses in Nigeria.
So typically, when we're writing our reports, we don't just love to sit with GDP numbers alone or broad-based numbers. We love to go granular, see what economic agents are doing, be it businesses or consumers. So what we did was to look at NGX 30, which is more or less like over 85% of the entire stock exchange in the country, right? We look at what their FX, what their profitability has been in the last few quarters. We try to exclude other sectors, other non-NGX 30 because it's a huge number. We just focus on them. And what we saw was that business profitability has improved materially, right? Which means that the struggle that businesses had prior to now in 2023, 2024, especially FMCG companies, consumer goods companies, and a few other guys in the telecommunication space, which were suffering from FX losses, stressed consumer wallets, we're beginning to see them moving on to an improved trajectory, which means that it is positive. And that gives us an indication that growth, is positive, and we expect that trajectory to continue in the course of the year.
Fantastic. Another one, we're going to flip this open now and take a look at there's so many charts. You looked at the drop in FX losses.
That's correct.
But you did not use banks. Can you tell us why? This next chart we're about to see here is the reduction in foreign exchange losses, I guess to the tune of trillions, but you did not use. Maybe there's an obvious answer here, but explain to us why do you have this chart here? So FX losses are coming down. Why do you leave banks out?
So we noticed that in the period where FX losses were huge, in 2023, 2024, at the peak of the reforms, right? Banks were they were long on FX, which means when you compare the assets to the liability, FX asset and FX liability, they were on the positive side, more of assets, right? So when you impute it into this number, it's likely to skew up this number, right? We might not paint the reality. So we want the reality which speaks more to the consumer goods company and other non-banking sector, which is closer to the people, right? Because in terms of the way they are structured and in terms of everything. So that gives a better clarity than putting in banks, which might skew the numbers.
Makes sense. That makes absolute sense. All right, another chart here, and I want to see, is there a correlation between business confidence, which shows looking forward, you're talking to businesses here, we've got a colorful bar charts, blue, brown, red, and orange or so. Is there a correlation between that bar charts that we're about to show here in terms of businesses being more optimistic about the future and the FX stability?
Yes, certainly, right? Yeah. Because one of the things that businesses, our engagement with them, the business confidence survey by the CBN, one of the things that we're able to point out is that the FX pressures, which they faced in the last 2 years, are somewhat reduced materially, because if you check in the first half of the year, FX was largely stable, despite the fact that we saw a bit of volatility due to global risks of sentiment. So when we begin to see FX stable, it's positive for inflation. When inflation is coming down, it gives the CBN adequate legroom to possibly reduce the monetary policy rate, which means that borrowing costs for business are going down, FX losses are reducing because of FX stability, bottom line are improving, employment numbers could go up, and that just shows that, okay, things are getting better. So that's why we think that there is a strong correlation. And just to point out, if you look at that chart, they also give guidance, what they think in the next 3 months, what they think in the next 6 months. The expectation in the next 6 months is stronger than what we currently have, which means that businesses are more optimistic, that the policies, the reforms, the effort of the CBN will sustain this current trend. And you know, we're beginning to see improved foreign investors, despite the fact that we saw a lot of volatility in H1. Nigeria was net positive, or we had a net FX inflows from FPIs and other FX sources, which means it's positive for FX narrative on Nigeria and other factors, right? Which means business confidence will continue to improve and profitability should continue to improve.
Fantastic. Now, there's a chart on new orders, but you already mentioned that when you were talking about PMI. So we just we'll show our viewers the chart. The new orders chart is also going up. I really want, I mean, it's a very rosy picture. It's very positive, but yeah, so there's the new order. So let's get to the next one though. I do want to ask you about the risks that businesses that you looked at in your reports, and they've listed them. Now, is this in order of priority? Like you've got insecurity, high interest rates, high taxes, insufficient power supply, and unfavorable political climate. What's the, is it just, talk to us about the ranking.
So it was not ranked, right? We just had to put that ranking based on what we saw from the CBN, right? This was the way it was ranked. They even had more. We just picked out these ones because we felt like they were the most critical. Despite the fact that we're seeing a lot of positive trend, businesses still have a lot of struggles, right? Insecurity issues still prevalent. Take, for example, some companies in the oil palm sector, Okomo, they've been struggling with insecurity over for a while now, right? And interest rate is still high. Many manufacturing companies still believe that interest rate is elevated. While we understand that, yes, interest rate needs to stay elevated for a while because inflation is elevated, we think that in the second half of the year, with inflation moderating, we are looking at 20% by the end of the year, and government is even more optimistic, slightly lower than 20%, right? That might give, it's possible that the CBN will do about 100 basis points cut. It's not significant compared to the rate hikes they've done, but going into 2026 and 2027, you expect more rate cut, especially if inflation should continue this current downward trend, which means that we will see more respite for manufacturing companies.
Thanks. Now, I have been accused, they say, Rotus, you only focus on corporations. Rotus, what about the people? What about and you folks at CardinalStone, you've pointed that out. So we have another chart for our viewers out there on Arise News who want us to focus on people. The consumers. Now, this is a bit different now because if anyone wants to focus on the x-axis, that's, the y-axis there to the left, it's in the negative region. So the survey says consumer sentiment or confidence it's improving, but it's still in the negative. So talk us through this chart here.
Yes. So the consumers, which is a large chunk of the Nigerian economy, they are still yet to feel the reform impact. And we have to provide three major arguments in the report. Number one, between the time reforms are initiated and between the time you see the impact on citizens, it takes quite a number of time, depending on the countries. We examined a few number of countries like Vietnam, and a few other. For some countries, it took about 5 years. For some, it took 3 years. And for some, it took about 10 years, depending on how deep your economic crisis was before the reform. For Nigeria, when we compare them vis-a-vis to those countries, we were not in a deep crisis mode like those countries. So we think that we are moving close to the end of the struggle for individuals, for consumers, right? Secondly is, following the CPI rebasing that was done, we saw that consumer prices or inflation is moderating faster than what is obtainable in the market. So people will say, oh, inflation is coming down, inflation is moderating. Prices are still going up, but inflation is moderating. When you go to the market, it's not telling the exact same story. That's because that disparity between what is reported and what's obtainable in the market is also not giving investors or consumers, rather, enough confidence. So we think that when we begin to see the reported numbers mirroring what is obtainable in the market, then we'll begin to see consumers being more confident, right? So those are the two major things that is still influencing that disparity.
Fantastic. So that's what consumers are spending. You also looked at what consumers are earning on the other side. Yeah. You took a select number of countries and compared Nigeria's minimum wage, and we're still lagging behind. How do we, talk about your observation in this chart, and how do we pump this? Is this about making more money and making more revenue so that the minimum wage can go up? Because we just reviewed it upwards.
So certainly Nigerians need to earn more, right? Because if you look at how inflation has jumped in the last few years, and how wages have jumped, clearly we are lagging behind in terms of real wage. So we have to look at, okay, what are other African countries doing? We saw that for the selected peers that we have there, they were doing way better and higher than Nigeria. And so if consumers don't earn enough, and they are still struggling with elevated prices in the market, right, confidence will certainly be weak. So we know that government has done enough to push up a minimum wage. We expect that all the states in the country should take up that minimum wage and pay, because as of today, not all the states in Nigeria today are paying that minimum wage. Some are still on the old minimum wage. Aside from that, some state governments are still owing backlog of salaries, right? And while we know that private sector, they are trying to push up prices, they are meeting up, the large chunk of Nigerian employment is skewed towards the government. And when you have backlog of salaries, when you have people still grappling with inflation and other factors, certainly you expect their confidence to be low. So we think that once wages need to improve, but for now, let government, the state government, let them implement full payment of that current minimum wage and clear all areas, areas that they have backlog salaries, basically.
Fantastic. You know what? We'll end it there. I know we had more to talk about because of time, because we're actually, in our next segment, we're actually featuring from your reports pensions, because there was a guest we had on the morning show from PenUp who came to talk about police pensions. So that's actually what is going to kick off our next segment. Olaolu Boboye, Head of Macroeconomic Research at CardinalStone Partners. Thank you for this very informative report, which I implore everybody to download. It is incredibly informative. I appreciate your time. Thanks for joining us.